on the dollar, and it doesn't get much better than that, to be honest. It does not get much better than that. You can see where we got back down to. We came back down to basically that key reference area that we've got in the background here, which is the markup level at 91.26. That's exactly where we ended up with the dollar reaching, which is just absolutely superb. So great trade, lovely outcome. Made a lot of money, thank you very much. And the bonds at the top edge, well, it just was a patient working exercise. We knew we had to go lower, but every time we go lower, we gained absolutes. We gained an advantage on the absolutes. If we go lower and we don't gain an advantage on the absolutes, well, we know we're going to have to go lower still. It's the way it works. So what does that actually mean? Well, we can obviously look at it as it evolved into the bottom edges here. So we can tell when we're looking at the curve itself, the question is when the curve is going into this environment here, the bond yield will be doing exactly the opposite, and that's what we're looking at is the bond yield. So as the bond yield does exactly the opposite, then obviously the idea is, do we regain exposure? To regain exposure, to take advantage of. And obviously on this acceleration case, now obviously on this one I was a little bit concerned because there was an acceleration in the curve, so we've got to be careful with that drop there. We've got to be careful with this buy opportunity here. But this one's a no-brainer because the acceleration on the absolutes is far greater than the curve, and therefore the drop we got in the bond yield is perfect for the buy trade on the yields. So we talked about that buy-side squeeze. We got the buy-side squeeze, and then we're fading back into the top edge for the absolutes. And then we get this lucky break with the tapering coming in from the Bank of Canada. And, well, I hope some of you decided to take advantage of that. Against the algorithmic idea that we were talking about this morning, there was still that very, very obvious top edge, a very, very passive top edge divergence. And we just had to be mindful of it, guys. Something as simple as that. Just had to be mindful. So we can see how this divergence effectively worked out. You can see there was the short-term push up to the top edge, which would put me on a very, very passive hold here. And that's the trade I was just talking about the break-evens. And then when we reach up into this last phase, there's just no question anymore. I mean, obviously, if you waited just for that little turn back off here, that little switch off here, you start working into the bond again, and then obviously you're trying to build as the price pins a wee bit higher. And obviously at that stage, we see the response to that coming all the way back down to the prior lows. The big, huge volume, of course, tells us that it's time to get away from the trade, at least temporarily, at that stage, which isn't a surprise because of where it is. It's back into that very obvious change of behavior level from the background that we sold at the last time. You can see that change of behavior there is a very, very obvious price print for us to work against. So when we look at the overall shape of these little elements, if we look at the way that the Q's accelerated, for example, and this is the question I was talking to Reeve, or was mentioning about to Reeve, was this idea of this idea here. And what I said about the Q's was that the lag behind the blue line, behind that orange line, is a great thing to see. Why is it great to see that? Well, because if it lags behind the orange line, it means that the Nasdaq continues to be discounted against an improving S&P marketplace. So that's when I talked about the idea that you've got to try and hold on to your Qs during that period. If you hold on to your Qs during that period, you're going to make an outperformance to the upside. Now, obviously, what happened to that Qs trade is just absolutely beautiful. It bottom edged, it pin rejected, it caught a bid, and just like we talked about, as the blue line accelerates, that means obviously the Qs are starting to accelerate faster than the S&P, but there's a point where you start saying, well, is it too fast? Is it going too far? In which case, of course, you start booking profits. How do we tell? therein lies the difficult problem, right? How do we tell which one's the fastest line out of two lines? Well, it's almost impossible to tell that by this exercise, but all we can do is we can try and analyze each individual piece of the jigsaw puzzle. Now we can tell the Qs is still heavily discounted. I think on a relative value scale, we can always assume, that this is definitely still heavily discounted on the basis that the blue line's even lower than it was before. And this is another opportunity to buy back into the Qs. And as it drops back out of that phase, you can see that we push hard into the top edges here, but is it faster than it was before? I don't think it is, to be honest. I don't think it is, but obviously the sell-off is pretty rapid, and that's going to start opening the door to looking to buy the Qs all over again, a second, a third, a fourth, a fifth time. And obviously the idea is you don't take the buy trade, you don't take the Qs buy trade until that sell turns, until that sell on the S&P, for example, turns. Then you take the Qs buy trade. There it is there. That's the deal. That's the money shot. That's the one you want right there. Because unless the S&P is going up, it's not a trade. It's not a trade, guys. You've got to be patient and wait for the trade to show. You can't second guess what the S&P is going to do unless you're using some internals for the S&P. And now obviously if we've got access to internals, then we can make a better decision about what's going to happen here. You know, this drop here was because the S&P was rising. That's the better of the trades right there. That's your deals. There isn't a compromise available in this. You've got to do it. You've got to wait for those to set up. So when you clear your charts and you then ask the question of the Qs, how did those trades work out? You can see how those trades worked out. Some of these trades are even on an uptick because there basically should be momentum trades. It's not as good a fade as it is a momentum shift, guys. Because a fade, we all know, is always going to be a more difficult trade, isn't it? So in terms of momentum shifting, we can start to recognize that this is a really good opportunity. And in terms of momentum shifting, we know that this is a great opportunity. And in terms of momentum shifting, we know that this is even a great opportunity, even on an uptick. Boom. Instant profits on every single one of those trades. Well, I say instant profits. This trade pinned a little bit against you here during the actual process, but I like it when it pins against me because I can buy more size, and especially in a market like the Nasdaq. And if you're trading, for example, on a micro mini contract, you may have the desirability to desire to buy, 5, 10, 15, 20 of these contracts. So therefore the pullback actually allows you to do that if you're going in one at a time. If you're building a position on the basis of a buzzy type process, then obviously the idea would be if it pins against you but the value is still really good, then that's what you want, right? That's exactly what you want to buy several of these contracts during that pin. Exactly what happened here on this pin. You buy on that pin there, you can actually get more size into the deal as the price pins into that area. What a trade sensation, guys. What a trade sensation, seriously. Now, obviously, if we're looking at these from the perspective of volume, buying at higher prices is never going to show up on any volume indicator, really, is it? So if I look at the volume indicator, of course, it would be far better if the red line was in the positive territory. Now, obviously, momentum trades, you don't need that, but fade trades, you do need it. So if I'm buying at these momentum areas, then obviously there hasn't been any pullback, so therefore the red line's not going to be in a buy trade. A bottom edge, the red line should be in a buy trade, and it should be at a last trader in location. So if I look in the background, I can see that there is a last trader in. Cliff was asking about whether this was any good, and I said if he wanted to see any particular trades, whether there was any volume in it, just to give us a shout to see what it showed, so that you can make a better decision without having to shell out the cash. But at the end of the day, it's just another volume indicator, and it shows an awful lot of the same things that we talked about before with Collins, money market, market maker game, and also time segmented volume, OBVs, and the like. So you can see that we did get some commercial buying because we got a pullback into that same level, and obviously that buy response was met by a lack of improvement to the upside. So when we understand that, when we understand this process, we say, well, why was there a lack of improvement? Because we're starting to see some internal weakness coming back into the queues. And obviously on the basis that we're starting to see some internal weakness, when we go back into thinking about the market in terms of its relationship, we know the queues is still very, very discounted. In fact, there might just have been another trade there. Because of the size of the discount, there might well have been a trade right there just in the last minute. So maybe there was a deal to be had at that point. But obviously you can't do a deal. I don't care what size of bloody discount you've got. If that S&P is falling, it is not going to be a trade, guys. Mark my words. Avoid it like the plague. And don't be seduced by the fact that the blue line is really cheap against the orange line. I don't care. I want to know it's cheap against a rising orange line, not a bloody falling orange line. Otherwise, you're going to get absolutely murdered using this process, guys. Murdered. I'm a little bit annoyed I missed that trade, actually. Cliff, you got that trade? Yep. Good. I'm a little bit annoyed I missed it because that was a reasonable outcome there. 68's now trading at a high of 84s. Unbelievable. No, the ES was rising, Stuart. The ES was rising. On that last one there, the ES is going up as the blue line drops here. So that little turn there, that little turn at that point just gives us enough evidence to start snapping up. Now, obviously, the NASDAQ is rising at the same time, but it's obviously rising a lot slower. It's obviously rising a lot slower than the S&P, allowing you to take a trade. Now, that's a bad miss for me. Look at what's happened to that deal, guys. Unbelievable. Unbelievable. Look at that. Cliff, what a bloody good trade. Great trade, mate. Like your stuff. Like it. Your cost is because you not just have told me to shut up so that I could get the deal on. It's a pity. It was a pity I never got that one. It's a good one. That was a good one to get, guys. Good value. Really good value. In future, tell me, Ray, there's a trade setting up. Now, get to your charts and do some work instead of babbling on in the background.